Salesforce, the latest tech giant to join the list of companies announcing layoffs this year. More than 23,000 tech workers have been laid off thus far in 2024. It's the most since March of 2023. That according to data from layoffs.fyi. Here with what, if anything, this signals for the labor market, we're welcoming in Betsey Stevenson, professor of public policy and economics at the University of Michigan. Betsey, it's great to see you. As we try to sort of decipher where the labor market is now and where it's going, how should we read these public layoff announcements when we're trying to extrapolate what's going on under the surface?
You know, I think it's incredibly difficult to look at a single company or even a handful of companies' layoff notices and draw conclusions about the broader economy. Let's step back and put it in perspective. Every single week, in a booming economy like we've had, roughly 200,000 people lose their job and are able to file for the very first time for unemployment insurance. So the numbers you're talking about are still small and relative to that 200,000. To give you another way to put it in perspective, every month, about 1.5 million people are laid off in the US economy when the US economy is doing well. So in a normal economy, we have a lot of movement. And in fact, that's actually one of the strengths of the US economy, that there are people who get new jobs, there's new opportunities. You know, there's 8 million jobs open right now. So there's a lot of opportunities out there. And then when things aren't working out, when you realize you have too many people, when whatever business you have tried to expand into, it's just not going as well, you cut back. And that's certainly hard on individual people. And I have, like anyone, empathy for the people who've actually got those pink slips, who lose their job. But it is very difficult to say that this is some kind of warning sign for the economy. In order for us to conclude there's a warning sign, I think we're going to want to see the broader numbers, those aggregate numbers, starting to move.
It sounds like, Betsey, I have heard some folks kind of question, they see these headlines, Betsey, about these tech layoffs, and they do wonder whether that's a kind of tell. Is that a kind of canary in the coal mine for the broader labor market? It doesn't sound, though, like you see it that way.
For sure, there are people who are like, is this the canary in the coal mine? Should we be looking at this as, more to come? Those initial unemployment insurance claims, they come out every week. So we're not lagging behind in that data. What we saw during the pandemic was the tech sector hired more than anyone else. They really got ahead of their skis. We've already been through, one round of, whoa, the tech sector is laying a bunch of people off. What does this mean for the broader economy? Turned out it meant nothing bad for the broader economy. It meant a healing economy, which was reallocating people away from a bloated tech sector towards sectors that were struggling to hire people who were in demand. I think that's the open question right now. There's still a lot of hiring out there. It's obviously not as booming of a labor market as it was, a year and a half ago. But the question will be, is this tech sector, a canary in the coal mine, or is this more reallocation to places where we need people more than we need them in the tech sector? I think we do still have a healing economy, so I feel very confident that people are going to be reabsorbed into other parts of the labor market. But there is a difference right now. We are in a normalizing, slowing labor market. And for certain, people who are experiencing layoffs are not going to find it as easy to get a job that is as well-paying or as good as what they had before. And that's going to mean people are feeling some pain.
Betsey, you wrote recently about the continuing challenge in predicting economic growth and the trajectory, right? And I guess we got another example of that today with the PCE and spending data. And as I was detailing earlier in the show, some of the economist notes I saw in reaction were almost giddy with, the consumer is still spending. So how do you get your arms around that now as we head into 2024?
What I love about the data right now is it's a reminder that it's people and it's people's choices that drive our economy. The economy is not some magical third-party thing that does its own thing and we just have to live with it. It's actually what we're looking for is just what's the collection of people in our economy doing. And the other data that came out was data that said from JP Morgan showing that people actually do still have more money in their bank accounts than they had prior to the pandemic. I think we have learned a really important lesson that it's not, a small set of job creators where if we give them a bunch of tax cuts, the economy is going to boom. No, it's actually all of us. And when we support people through difficult times, when people are able to continue spending, even as they go through a difficult time, when they've built up enough of a nest egg where they have access to credit, we see that that's what actually keeps the economy going. And in fact, what I think is getting not enough attention and airtime is really the record amount of new business formation that we've seen in the US economy. That's not coming from big corporations. That's coming from everyday people deciding they're going to take a chance at starting their own business. That's been one of the big drivers of this current economy. And one of the things that I think has been really hard for people to predict. People have been studying new business formation for decades, have said they didn't see this surge in new business formation coming. Why? Because I think we don't really deeply understand what it takes in the psyche of someone to start a new business. And what we're learning is clearly one of the things it takes is knowing you'll still be able to feed your family.
As you say, it comes back to the humans. And thank you very much, Betsey Stevenson, for joining us and your perspective. Appreciate it.